So let us start Unit 2, Credit, Loans and Advances. So in Unit 1 we have discussed an introduction to the banking and the structure of banks in general. From this section onwards we'll start discussing about various departments in banks. See, the approach that we'll be taking is we'll take each department, a typical department in banks, and study the points related to that particular department. Well, this is the strategy that we're going to follow. Otherwise, it will be banking is a very exhaustive topic. If you don't organize it that way, it's going to be very hodgepodge. Okay, so let us start with the credit department. It's also known as advances department, or in common man's language, it is a loans department. Okay, so first of all, in this chapter, let us see the structure of credit departments. Now, a typical commercial bank has many departments, as I told you. Each handles a specific function. So the first department we'll see the credit department. When we say credit department, please remember that we usually refer to loans to corporate borrowers, that is to companies, not to individuals. For individuals, there is a separate department called retail credit department. Retail loans are loans given to individuals like housing loans or personal loans, gold loans, education loans. Those loans are handled by a separate department known as retail credit department. When we say credit department, usually we mean corporate credit in banking terminology. Okay, so in this chapter we'll discuss corporate credit. So we already discussed how banks make profit. Okay, so banks accept deposits from depositors and lends it to borrowers. So the depositors are paid some rate of interest, while the borrowers are charged a higher rate of interest, and the difference will be there, the margin or the profit for the bank. So for credit department is very important for a bank because it is contributing directly to the income generation. Okay, so how credit departments are usually structured in banks. There'll be some sub departments within a credit department. We'll have something called industrial finance department, that is the key department, which usually is divided into large corporate and mid corporate. So large corporate department will be that department which is the number one department. It deals with the top borrowers, the biggest accounts, thousands of crores, very large. The biggest accounts of the bank are handled by this department, large corporate department. Then there is a mid corporate department, slightly loans which are still big, maybe hundreds of crores, but lesser in value than large corporate department. Then we have a department called MSME, that is micro, small and medium enterprises. We will discuss this department in a separate chapter, but it's also very important department because of the priority given by the government. Okay, these are micro, small and medium enterprises department. Then there's a retail department, as we discussed, that is the loans given to individual borrowers. And then there's an agriculture department. This department gives loans given to agricultural borrowers, crop loans. That also we'll discuss in a separate chapter. So in an interview, if they ask what are the various types of credit, you have to say corporate credit, that is industrial finance, MSME finance, retail credit and agricultural credit. So let's now see what is the sanctioning hierarchy in banks. Okay, say a company walks into a bank and requests for a loan, say 100 crores. So what is the sanctioning hierarchy? Who can sanction this 100 crores? Because banks deal with money, it's a huge amount running into crores, sometimes running into thousands of crores. There should be some delegation of powers, like some people should be authorized to sanction up to a particular limit, say 5 crores, and some senior executives may be delegated with powers with higher powers, 10 crores, and so on. There should be a sanctioning hierarchy. That sanctioning hierarchy is based on what is known as discretionary powers or delegation of lending powers. Every bank will be having this delegation of lending powers where some employees are given powers up to some amount for sanctioning loans. For example, branch manager in a small town may be given powers up to say 25 lakhs. So if some borrower applies for say 50 lakhs, then the branch manager cannot sanction that loan. He has to refer that file to the next higher authority, maybe a zonal office. Okay, so that's how banks are structured with regards to the sanctioning of loans. And in this hierarchy, the highest powers for sanctioning of loans, we spoke of borrowers having thousands of crores, big companies like Reliance or Tata's, those big companies. Those powers, the highest powers in a bank, in this hierarchy, the highest powers are vested with what is known as management committee, MC of board. So MC is a committee within the board of directors. Okay, so every bank will be having a board of directors, which is the most powerful body in the bank. Like it comprises of the chairman and managing director. CMD is an individual. Okay, chairman and managing director, he's the operational head of a bank, right? Like he is the head of the bank, but still there is a powerful body known as board of directors, of which he is a member. There are other members also, like ED, a nominee from the Reserve Bank of India, nominee from the Finance Ministry. There will be some independent directors like chartered accountants or academicians, and all these put together will become form what is known as a board of directors. And board of directors will be having a number of subcommittees, one of which is known as MC, Management Committee, that will be vested with the powers to sanction big loans. Okay. So below MC, so let's start with the sanctioning hierarchy. The topmost we said is MC. Below MC will be CMD and ED. So MC will be having unlimited powers. Any amount it can sanction. The next level will be CMD. Say CMD may have, let's say, 60 crores. Right? So if a proposal is crossing 60 crores, someone has come for 100 crores, maybe it will be referred to MC. But below 60 crores, CMD can sanction. And then below CMD there will be ED. Say ED will be given powers up to say 45 crores. So if a proposal comes for 40 crores, ED can sanction. If it comes for 50 crores, because it is crossed 45 crores, CMD will sanction. If it crosses 60 crores, MC will sanction. So like that. Like these are just example figures. These are dependent upon the bank. Each bank will be having its own figures for the delegation of powers. So below ED there will be general managers who will be having lesser powers, and it keeps on decreasing till the branch manager who will be usually having the lowest sanctioning powers. Okay. Now also remember that CMD is the head of the bank, is the highest authority of the bank, but board of directors are not involved in the day-to-day running of the bank. Every day board of directors won't come to the bank and run the bank. Okay, they're not into operational running. That will be handled by the CMD. He's a regular employee who comes daily and runs the bank. But board of directors meets say once in a quarter, like that. They're not operationally running the bank. They usually set the policy decisions, take very critical decisions, key issues, performance metrics. Those are the things that board of directors do. But the day-to-day operational head is the chairman and managing director. Also, this post of chairman and managing director is more relevant for public sector banks, where the posts of chairman and managing director are combined into one person, right? But in private sector banks, you see this different. There will be a separate managing director and the separate chairman. Okay, but you need not go into that issue. Then, for loans of higher amounts, which we said this GMs, ED, CMD, there is a concept of credit committee. Okay, so at lower levels, say branch manager and all, they will take individual decisions. They can sanction loans with the individual decision. But as you go in the higher hierarchy, GM, CD, and CMD, the sanctioning authority will be those persons, ED or CMD, but there will be a recommending committee known as credit committee. So credit committee is usually it is a group of senior executives. Okay, so it could be a group of general managers, something like that. So what those people will do is when a big loan proposal comes, they study the proposal and make a combined decision, and they make their recommendations to the ultimate sanctioning authority like CMD or ED. So that committee is known as a credit committee. The logic is usually to help the sanctioning authority, right? Because combined inputs of the executives will be able to identify various gaps in the proposal. Now, even though specific powers are given to authorities, there will be some cases, because it's a practical business. Okay, sometimes there will be some urgent sanctions need to be made. Then there is a concept called ratification. That is, the person who is given some powers might exceed that power. Say a person is given 10 crores. There is an urgent proposal to be sanctioned, say 15 crores. Can exceed, and then they will seek ratification, confirmation of the higher authorities, saying that due to these reasons, urgency, we have exceeded our powers of lending. Please confirm our action. So that is known as ratification. Okay. So in this chapter, the question that you have to be prepared are banks offer you free services like interest on deposits, checkbook, etc. How do they make money, or how do banks make profit? So that we have discussed. What is creditor advances, or what does credit department do? Usually this is credit department means industrial credit. What are the various types of credits, or what are the various credit departments in bank structure? Like we discussed this: large corporate, mid corporate, MSME, retail, agriculture. Who is the head of a bank? It is the head of a bank is the operational head is chairman and managing director. In private sector banks, it will be managing director. Okay. What is the board of directors of bank that we discuss? Can you tell us some members who are part of the board of directors in banks? So it will be CMD, ED, nominees from Finance Ministry, from Reserve Bank, and some independent directors, or like say chartered accountants or academicians. What is management committee of the board? We spoke about this. This is a subcommittee within the board of directors which deals with the sanction of large corporate loans. What is credit committee we discussed, and what is ratification or confirmation? This is when the delegate powers is exceeded.